This is Bloomberg Crypto, a daily Bloomberg iHeart podcast.
And I'm Philip Lagerkranser, senior crypto editor for Bloomberg News, in today for Stacey Marie Ishmael. It's Friday, December the 2nd. Well, the apples are falling from the crypto tree, one by one. Contagion is still the name of the game, and this week it was BlockFi filing for bankruptcy protection. Also, crypto hedge funds are losing faith in centralized exchanges. Here to help me break down the news is Bloomberg senior crypto editor Anna Irrera.
The question is, if something happens to Binance, and I'm not saying that we have indications that it will, but who rescues Binance then? And, you perhaps need money from outside the industry as well, not just inside.
And crypto reporter Tanzeel Akhtar.
The current regulation of crypto is partly shaped by misconceptions, the belief that space must be given to innovation at all costs.
Crypto contagion is showing very few signs of slowing down. Monday, it was BlockFi's turn to file for bankruptcy, filing for Chapter 11 bankruptcy protection in New Jersey. Anna, you helped cover that story a little bit. Can you tell us a little bit about what happened and how significant this is?
Yeah, it's a big deal. It was not totally unexpected because they were having trouble earlier in the crypto winter being a lender. Obviously, they suffered from the falling prices and they were rescued by FTX. And so obviously now we know FTX itself needed rescuing. So clearly they had to sort of file for bankruptcy too because their rescuer went down. It wasn't necessarily a massive shock to the sector. We don't know the extent of contagion because as with FTX, the names of the creditors have been redacted. So we don't know yet. But people were sort of expecting it more than perhaps, obviously for sure more than they were expecting the FTX collapse. It does obviously leave the door open to more contagion because who knows who their counterparties are and if perhaps they are also counterparties to FTX. So I think people are sort of expecting perhaps more shoes to drop, but we'll have to follow what's going on there.
Yeah, and to your point about, having names redacted for major creditors that are also clients, I think we had at least 6 or 7 names with north of $10 million of claims on them. So it's fair to, even without knowing who the names are, it's fair to assume, presumably, that several outfits are sitting on rather large losses out there stemming from this potentially. Huh?
Yes, yeah. We saw the list of creditors without names had like big sums next to it. So it will be someone, maybe not necessarily a known crypto-only firm that has a huge loss because of BlockFi. Actually, curiously, one of the entities that was mentioned and wasn't redacted was the SEC. And BlockFi owes it $30 million, which was part of a settlement that they were paying because of an issue they had earlier in the year, which is somewhat funny, but then not really that funny. But yeah, it's curious. I guess it's like part of the crypto world that someone going bankrupt owes the regulator millions of dollars.
Basically, SEC, get in line. You alluded to the fact that this wasn't entirely a bombshell surprise. And we've actually seen crypto markets fairly stable throughout the week. We got Bitcoin trading, I believe, just below 17,000 right now. But there are a wild range of forecasts and predictions out there right now. Taz, what can you tell me about that? What have we seen in the last week?
Yeah, sure. So, it's pretty surprising that the Bitcoin's reached 17,000. It's the highest level in 2 weeks. And Ether also has climbed up 4% as well. The predictions out in the market right now. So we're hearing Mark Morbius, who's the co-founder of Morbius Capital Partners. He sees the next target for Bitcoin being $10,000. So although he did say he won't be investing his own cash or client money in digital assets as it's too dangerous. And he also went on to say crypto is here to stay, as there are several investors who still have faith in it. So mixed messages from Morbius. There was also a Wall Street Journal column out by Andy Kessler who says crypto's final price could be zero, which states that no sane lender would extend credit against assets lacking any underlying collateral. He also went on to compare the technology and debt to Red Bull and milk, saying that they don't mix. So you're seeing mixed messages, and then the ECB also detailed its stance on Bitcoin market in general through a blog post, saying the current regulation of crypto is partly shaped by misconceptions, the belief that space must be given to innovation at all costs. So, I mean, the post in general was quite negative about crypto. So, I mean, there's not a lot of faith in the market right now, but who knows?
What are the bulls countering with? Anna, one thing that we see quite a lot is, people are still building, the blockchains are still operating, the DeFi protocols are still running. What are we hearing from the bulls right now?
So the crypto proponents, and you can separate the Bitcoin maxis from the rest, or in general, sort of people that believe in digital assets, say and point to the fact that actually FTX isn't Bitcoin. It's a centralized entity, and it's sort of the opposite of what you would want crypto for. And it just, again, reinforces the idea that you need decentralized money because things like FTX happen. And so that, there's still value in digital assets and in Bitcoin specifically because it's not what collapsed, and the network's still running, and it wasn't a crash it wasn't like Bitcoin filing for bankruptcy, if you will. It was FTX. Of course, like one argument you could have to that and is that, normal people can't really distinguish between perhaps FTX and Bitcoin or the protocol. They might have bought Bitcoin through FTX. And so maybe not for everyone, the distinction isn't very clear because many of these firms that are centralized entities became the representatives for the asset class. If you think about it, especially how much money they spent on advertising over the past year. I was watching the World Cup last night. You still see Crypto.com advertised near the players. So it will be clear for people in crypto, but it might be too subtle maybe for some, tourist investors, as they like to call them. But we'll see. Like, certainly, it is quite surprising that Bitcoin has held this much. Maybe you would have asked someone, even a crypto believer, a few weeks ago, what would happen to Bitcoin's price if FTX collapsed in the space of a week. And many of them, even Bitcoin believers, would have thought that it would have fallen beyond what we saw it go down to.
Yeah, I'm surprised it's not lower. It didn't crash further down to like 10,000. Anyway, that's just my opinion.
There is a little bit of unusual resilience here, maybe. Maybe the hodlers are finally standing their ground. I do want to talk about another type of trader that we just covered in a really nice story that, Anna, you worked on. The hedge fund crowd, or should I say the crypto hedge fund crowd, that are following the FTX debacle, kind of losing faith in the notion of the centralized crypto exchange as it stands today. Anna, can you tell us a little bit more about that? Yeah,
so obviously one of the biggest groups that were hurt during FTX were pro traders and hedge funds and market makers, because FTX was built by a trader and by traders. One of their original slogan was built by traders for traders, I believe. So it was hugely popular with professional investors. It was seen sort of as the gold standard, or like it was, really great for professional trading. It had lots of leverage. It had all these derivatives. So it's very attractive. So clearly when it collapsed, it caught many people, even like pro OG, crypto funds, caught them by surprise. And so some of them have had big losses. I mean, obviously they range. One fund we heard had to close. There might be more we haven't heard of, but many had a little bit of money on there for sure, because you needed it to trade. And another thing of crypto platforms is that it's not like Wall Street, where you have a trading platform, then you have a custodian, a clearing house, and a prime broker. A lot of that happens on exchange. And so you also need to post your collateral on exchange if you want to margin trade there. And clearly, if then the exchange goes down, you're not only losing your trading capital, you're losing what you're moving on exchange, but you're losing your collateral too. And that's a big leap of faith now, right? To go on another exchange. So we're hearing or a reporter was hearing about sort of some funds that are a bit wary now and they don't want to post their collateral anymore. So they're trying to push for separation of powers, which would then make the market look a bit more like Wall Street, which is, of course, ironic because the whole point was to make it not look like Wall Street.
And this is a theme that's actually been cropping up quite repeatedly in the last couple of weeks here, post-FTX. It's this idea of the crypto exchange, or I should say the centralized crypto exchange, is kind of a sort of a weird animal, which does multiple Wall Street functions in one organization, wraps them all together. It's sort of, as you saying, there's a little bit of an irony in there, huh? That the industry that was supposed to be the inverse of Wall Street might actually become more like Wall Street as a result of this. What are your thoughts around that?
Yeah, and I guess it's interesting because perhaps it just shows how it is just following the evolution and some of the mistakes that happen on Wall Street. Because obviously, like some of the separations of powers on Wall Street and in market structure there were enforced after the financial crisis of 2008, where people got hurt and where, the rules came and Madoff as well, like clearer segregation of client assets, moving more stuff on, murky stuff on transparent platforms, and making sure that everything was separate because that reduces conflicts of interest. So in a way, rather than, I guess it's replicated Wall Street and also the mistakes of Wall Street, which is really interesting.
We'll be right back with more of the week's top crypto stories with Anna Irrera and Tanzeel Akhtar. It wouldn't be a full crypto episode without talking about our favorite crypto exchange, Binance. They were in the news striking a deal in Japan. Taz, what happened there?
So Binance is re-entering Japan, which is really interesting. In the early days, Japan was a hub for crypto, as it was home for Mt. Gox. So I'm not sure I'm sure people have heard of Mt. Gox and how there was a massive hack which involved 460 million at the time going missing. So Japan itself has been very careful when it comes to regulating crypto. So obviously Binance re-entering Japan, I think, is a big deal because Japan is super careful when it comes to regulations around crypto.
They've also been one of the markets that has been one of the older adopters, I think, in Asia of crypto. And obviously, as Taz was saying, they were burned by Mt. Gox. So early on, they tightened regulation a bit more. So it's interesting now. And that led some players to leave. And I guess now with regulation that's in place, it's leading players to come back, which is, I guess, some of the point that some crypto firms make. They say, well, the lack of regulation makes it unclear, and so it's pushing us to go offshore or somewhere else. If we had clear regulation, at least we know what rules to play by, which is a point. But then I guess the counterpoint is, you could just follow the regulation that exists on
I would say
other assets.
That's quite a bullish move on Japan's front when it comes to crypto, like letting Binance, one of the biggest exchanges, to list out there. I don't know. That's my point of view.
They're not, I don't know if the term is listing. I think they bought an exchange.
They are gaining a foothold in Japan, I think we can say. And, on the topic of Binance, they are obviously the 800-pound gorilla in the industry right now, especially after FTX's demise. And they have been kind of on the trying to get on the front foot a little bit in the last 2 weeks. And one of their initiatives, Anna, has been this industry recovery initiative, what do you want to call it? A rescue fund for promising but cash-strapped crypto startups.
Cece, you've talked about launching a crypto recovery fund. Where are you on that? You've talked about interest being quite substantial. Who's interested?
There's been back and forth on how to structure that. Do we make that a loose fund or do we make it an actual fund? I think we're kind of going with a loose approach where different industry players will just contribute as they wish. So,
what have we seen there, and what might their motivations be behind these efforts?
I guess maybe part of it is also for morale, to show that there's still money and interest in crypto. Obviously, like a crypto firm would have interest in crypto, but just to show that there's still some life here. It was interesting that they said they have around $1 billion. The restructuring fund will be around $1 billion, and they had other firms, like notably some market makers, committing money too. But like the lion's share was from Binance, which is curious. But as well, you're sort of seeing parallels with the early SBF days, the SBF of summer when he was coming in and having to rescue. So, the question is, if something happens to Binance, and I'm not saying that we have indications that it will, but who rescues Binance then? And, do you perhaps need money from outside the industry as well, not just inside? But it's definitely an interesting thing to watch and see what they decide to invest in. I think we had CZ on TV last week, and he was discussing how they're looking at another Voyager bid. They're going to look at FTX assets as well, see what's viable there. And I think they said they were in talks with Genesis too.
So basically, to conclude the session, watch CZ and Binance and let us see what happens in the next few weeks. Thank you, Anna, and thank you, Tanzeel. You can find more of Anna Irrera and Tanzeel Akhtar's reporting on the Bloomberg terminal and on Bloomberg.com. For more, be sure to check out our twice-weekly newsletter, Bloomberg Crypto.
This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net. The supervising producer of Bloomberg Crypto is Vicky Vergolina. Our senior producer is Janet Babin. Our producers are Mohammed Farouk and Sharon Barrero. Our associate producers are Ty Butler and Moses Undum. Desta Wonderad is our engineer. Original music by Leo Sidran. I'm Stacey Marie Ishmael. We'll be back tomorrow.